Hi traders, Greg McLeod here from the Elite Traders University, and I want to welcome you to our market map, pip and run market map. And we're going to get right into the charts and give you my outlook for this week. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And just to introduce you to me, if you've never met me before, my name is Greg McLeod, and I'm the CEO and founder of the Elite Traders University, and we're an organization dedicated to helping transform traders from break-even or losing traders, or maybe who are brand new to trading and want to turn or create an extra income, a consistent income. And so I've been doing this for 21 years, I've been trading for 21 years, and I've traded options, futures, stocks, and Forex. I'm the foremost authority on short-term trading and scalping. You know, I chose to be a scalper or a day trader because I want to get in and out of the market fast. I want to be flat. I don't have any positions that may ruin my night or ruin my weekend. So I don't hold anything overnight, over the day. So that's what I like teaching, and my students have tremendous success. Now, I have 8 years as a currency analyst and trader coach at one of the largest retail Forex companies in the world, FXCM. And many of my articles and videos are still on their website. And I traded live in front of audiences at the expos around the world. Now, before that, I was 16 years as an instructor in public education, and I taught middle school and high school, and so a big transition, big change to get into the financial markets. Now, I also worked at a prop trading desk and a top-tiered U.S. bank. So I have a lot of experience that I have put to work for my clients, and hopefully after your experience with me, you have desired to become one. Okay. Now, our agenda for today is to look at, in this edition of Pip and Run, the market map. We'll look at key levels of support and resistance for majors and gold, and possible scalp entries and targets. And we'll look at some high impact news events that could move the market. Okay, so let's go ahead and get to the charts. First up, we have the euro. The single unit is the most widely watched financial instrument in the world, and the most widely traded financial instrument in the world. Can you believe that? Since 1999, it was made available to the public, and it's quickly became the top traded currency. So we want to take a look at our the euro, and what I have done is already prepared support and resistance levels here that can actually help you determine areas where traders will come in and either get long or get short the market. Okay, so I would like to, this is the report, the 30th here. I'm going to go back here. I'll put this line here to tell you we did have this level of support. Price bounced here on the euro. That is at the 1.0657. We have an uptrend, clear uptrend, higher swing highs and higher swing lows. We did have a previous downtrend that we can see. If I just highlight that, and you can see this is what I like doing is going at 50,000 foot view. So if you're a scalper, and I'm a scalper too, you say, well, Greg, why are we looking at daily charts? Well, these support and resistance levels are very significant. Okay, that the longer or the higher the time frame, the more relevant and the stronger support and resistance levels are. Yes, you might see a 5-minute support level that might hold, or a 1 minute or 15 minute, but I tell you what, weekly and daily support levels have the greatest impact in the market. So we want to plot those out, because if we don't know where they are, we can be digging in somebody's backyard and hit a power line or hit a gas line or cut someone's their cable TV by digging too deep, right? So we're wondering why we can't go any farther. Why? Because there's a big giant support level that's been hit, or resistance level that's been hit. In this case, where we talked about last week, that since we are in an uptrend, higher highs and higher lows, we could see a higher level, and I was saying 1.0773 if you watched last week's video, and sure enough, we did hit that level repeatedly during the week after a test And I did have an arrow here that we could possibly break here at that one spot 0657. We did briefly, but the next day opened up big wide-ranging candle, taking it right up to that above that one spot 0773 resistance level, and even getting up over one spot 0800, falling short of the one spot 0850 resistance level, right? And then we pulled back. So now we're sitting here. So basically this bullish move continues. The dollar continues to be soft, even despite we have the U.S. having a better than expected non-farm payroll. Non-farm payrolls came at 225,000, which was much better than expected than the 170,000 expected, and much better than the previous number of 157,000, but was upwardly revised to 157 from 156. Okay, so despite good U.S. data, we have the dollar selling off, and a lot of it has to do with the riots and protests and different things are going on with Trump's travel ban policy, and a lot of people reacting negatively to that, and a lot of the market does not like instability, so we did see some type of a pullback in the currency markets. Now, although we did see the U.S. stock market in a higher note on Friday, based on those numbers. But one thing about the non-farm payroll that we did see is that wage growth was down. Okay, so we have still have some hurdles in the U.S. Economy, but going to the euro is considered the anti-dollar. So when we look at the euro, we're looking at when it's going up, the dollar is going down, and this plays right in line with Trump's weak dollar policy, which he wants to use in order to stimulate exports. And so he's turning back, going against the years of having a strong dollar policy, which has basically hampered U.S. multinationals, making our products more expensive with a higher dollar. So the lower dollar is something desirable because every country is trying to devalue their currency. How can we trade this? How can we take advantage of this policy by Trump? Is by shorting the U.S. dollar and going ahead and buy other currencies against the U.S. dollar. Now here we're sitting at the one spot 0773 area, looking for a move back up to the 10850 area. Okay, we close at 10784, so we probably see this roll into the whole number round number 10800, and maybe up to the 10850 area. So that's the next level. The 200 moving average comes at 10874. Let's drop this down to a 4-hour chart. I know I'm spending a lot of time on it, but I'll go through the other currencies a little bit lower. So we can see we did get the break. It's outside break, hit the 200 simple moving average. We didn't get to the next support level, but we came back strong above that trend line and continued to power up. And now we're kind of like topping out here. So we may see a retest of this trend line about the 107.43 area. That might be a great entry to get long for a move back to the top side. Okay, so that's what we're looking at. That we did have a kind of a topping pattern here. We'll probably look for a pullback to this blue line about the 107.40 area, maybe a little bit deeper, maybe down. If we can get into the 106.99 area, that'll be a great area to go to get long. However, we are topping, so if we break below 107.73, might be good for a short scalp, a quick scalp. But we don't want to overstay our welcome and be ready to flip and get long in the direction of the dominant trend. Okay, so let's go ahead and move on to the next. Let's drop down to maybe a 5-minute chart to possibly give you a target, some type of okay, so here we go. We have got a nice little break above that daily. We came back off the 200 simple moving average above the 107.73, but what we have is lower swing highs and lower swing lows, 1, 2, 3, 4. So we can probably see a test of the 107.60 area, and that might be a good place for us to initiate longs. We also may want to even look at initiating some shorts on a break of this trend line, 107.80. Good for maybe a scalp to the south side, but looking for maybe 10, 15, 20, 30, 40 pips to the downside. However, be ready for a new move higher. This is like a Gartley pattern as well. So once we get north of 107, the 107.95 or so, if we get above 107.97, we could probably see a further move into the 108.50 area. Okay, that's the euro. Okay, so let's go on to our next pair and probably move a little bit faster because don't want to make this too long. We'll go to the Canadian dollar, and here's our Canadian dollar. A daily chart. This is a 50,000 foot view. We're like flying over. Think of it like we're flying an airplane, and you can see the river. You know, sometimes if you look down from the airplane, you see the river, and it kind of looks like a chart, a price chart. And you know, it's actually the river is undulating in Fibonacci patterns too. But that's a whole different video. Now, here we go. Here, Canadian dollar. We had these lower swing highs and lower swing lows, but what's very interesting in this daily chart, as you will notice, is that we have a multiple doji pattern here, double doji, a doji here and doji here. A doji is a tie, a small body candle, small body, and you can say it's a doji, it's a spinning top, but anyway, it's a narrow range bar, and we've been in the same range here after bearish strength, bearish strength, and now the bears are running out of steam, so we could actually see some profit taking, some type of push back higher, maybe up to these other levels. We're currently at the 101.3019 area. Look for a move up to 130.41, 130.54, and we might even test a little bit higher than that, based on this. If we take this swing, if we take this current swing,
sorry, no results found.
If we take this swing, we can probably see a move back up to maybe maybe even as high as a 38% retracement, 130, 133. Okay, that would tie in with this daily resistance area, 1.3119. So we could probably see maybe for Monday seeing some type of a rebound from that area. In fact, we had this big, huge bar sell off here, so we might see it. Okay, there we go. Okay. So we're sitting right on daily support, 130.19. We'll see if in the 200 simple moving average, we'll see if we get a bounce from here and maybe a move back up toward 130.41. Okay. So, but after we maybe get up to that 38% retracement, we will probably look for a short. Okay, for a bigger move down. So we could scalp it up for a little bit, but the bigger move will be down, and we can get more pips on the way down. So let's go ahead and move on to the next pair. Let's go to the Kiwi dollar, and we'll start with start out zooming out to our daily, our big view, and we've been moving sideways in consolidation. This base consolidation is usually a continuation pattern where a price goes up, forms a base, and then launches from that base. Okay, almost like a launch pad. It's building a launch pad for it to launch launch higher. So it may move sideways between these areas. It's hitting lots of resistance from previous levels, right? But this huge gapping candle here might be filled, and we could see a move back up toward 73.80 and beyond. Okay, so we might consider a basing pattern here, sideways. Let's drop down to maybe a 15-minute chart, and then you do have consolidation, and you can see a big power move to the upside. We're sitting at daily support. These are daily lines. These red lines are dailies on a 15-minute. We're superimposing daily analysis on a 15-minute chart, since price bounced from this area very strongly, and now we're kind of stair-stepping up. We could scalp it to from currently at 73.12. We could see a move up to like 73.24 for a few pips there. If we clear this area at 73.25, look at the gapping space here, and if we clear, we can get up to like 73.56 or so. And these areas, they're not daily resistance areas. Okay, so the next daily resistance area comes up here. So, and when we have huge candle, this candle basically wiped out all this previous price action up to here, and we came back to test this and maybe launching up higher. So we could see a move higher on Kiwi. If we get below, like using daily resistance and support, floors and ceilings, if we break the floor down, we break that low, we can see a move back down here for a quick scalp. Okay, so we can scalp in between, for the small things, for like 5, 10, 15, 20 pips, 30 pips. Don't overstay your welcome. But look for that bigger move that will come back into play, which could take us higher. Again, the story is weak dollar, and also the other story is strong yen. So, pound yen and pound dollar probably not going to move in the same direction, and euro dollar and euro yen. So we're having a kind of a disconnect on our currency pairs. They used to kind of like track together. The yen being a fear-based move. The yen is getting strong, and there's repatriation flows going into March. The Japanese fiscal year ends March 31st. So seasonally, you see the yen getting stronger anyway, but with all this geopolitical unrest here in the U.S. and possible with Iran shooting missiles, you've got, North Korea, launching missiles too, the nuclear tests. You have everyone kind of like, trying to test the presidency around the world, and this type of environment is, just seems like just a yen long trade. Just short pound yen, short Aussie yen, and just let it drop and make money. Okay. So here we go. This is pound versus US dollar. We see this big drop, from Brexit, a rebound, a test lower, and we've found some support here at the 125.11 area, a couple of small body candles, but we're below this daily area. So we could come back and test 124.22, which is this area here. Okay. Now these areas I drew earlier. Okay. So once I draw them on the daily chart, I really don't have to keep drawing them over and over again. And so if you want to know how to draw them or have some questions, you can always post them in the chat box in Facebook and we can talk about them. Okay. But for the most part, these lines are already drawn, so it's very simple. I mean, if we're short in here, boom, on the 30th, we rallied up into that resistance area and we dropped. Just a great trade. All right. And we're sitting here in support. But we've got a tweezer bomb, which is bullish, but we're below daily support. So it's kind of like one of those mixed pictures where it looks kind of bullish, right? But it's really bearish because we have two candles in a row below a daily support, which is now formed resistance, right? So we may get another shot down for a quick scalp, a retest of the low, or a retest of this low back here, 124.15. We could see 1, 2, 3, 4, 5, and a retest. I'd probably I'd like to see a short for a retest of 124.14 for an initial scalp for Monday, and then look at maybe this area or even the whole number, round number 124.00, and then for a move back up and above these highs. So this will be a great place to get long once this bearish move finishes. Okay, so we could see a move down first, right? Fake out, manic Monday, fake out, and then a rise back up, back up to make 27. Okay, so let me know how that works out on the pound versus US dollar. Again, I'm constructively bullish long-term, short-term scalp. I'm looking for a retest of the old low back here from January 31st down at the 124.11 area, and that's what I would be looking at, flipping and getting long. All right, let's keep going. Aussie dollar, let's keep it rolling, keep it moving, and here we go. Let's start with the 50,000 foot view. We're going to zoom on out. Let's go to our satellite photo, get a survey of the land. And we can see we have this nice bounce here, and it's a really nice bounce double bottom is usually bullish, and I said that we could see a target back here 77.84. Those targets from last week still hold, and we've been moving pretty good. Trend line break and nice extension, and we're filling that big gap down, and we're filling that to the upside. But right now we're sitting at resistance 76.86. You could risk a short scalp because usually we're hitting resistance like that. If we break 26.86, we could see a move higher. We do have a higher swing high and a higher swing low. Let me go out to a 15-minute chart, get some more definition there, and bring this up a bit. Okay, so we had kind of a pseudo double top there. So, and we have a lower swing high, right? So this looks temporarily bearish. So we could see if we have a double top, typical double top target is the middle part of this. If you figure this is like a letter M, right? A letter M. That we look for that 76.40 to be tested right in here. There's like a demand zone right there as well. That might see a test of this area here, right? So a couple of things you can do to trigger yourself in. You can trigger in with a trend line break to get short, right? Now there is daily support here and a 200 moving average moving up, so it might not get that far, right? But if we do see a breakdown into this area, we're probably going to be tremendously oversold, all right? And if we get down here, I mean, that'd be very cool when you can trade against one of these daily lines on a short-term chart. Okay, so again, any of the pairs I'm long, I'm probably short-term, very short-term, like a day, for some short scalps, and then look for a move back up above these highs. And if you can't watch the computer or anything like that, look for just breaks above old highs. These old highs should be taken out this week. All right, and let me know. All right, so we looked at the Aussie dollar, and we'll take a look at the dollar Swiss. Kind of look at the major pairs. Dollar Swiss, and we'll go with a daily chart, 50,000 foot view on that. And you can see this double top, major double top, and we've been working our way down ever since. And I posted this, in every social media place. I was like telling people, hey, this is going down. And now we've broken below the 200 simple moving average with long wicks where price reached up at parity, near close to parity, like 99.87, and closed below the 200 simple moving average. So we've got a couple of pretty bearish kind of like candles there, and we did get we didn't get even much of a reach up from this other. I mean, we did have this kind of reach up here, that long wick. That's all we got, and we continue to work our way down. Now look for a break of 98. This is 98.86, and if you see 98.86 break, we could see all these levels coming into play. 98.35. You want to know where to take profit. Take profit the next level of significant support in a downtrend. However, we might see a little bit of a bullish move to the upside on Monday. Okay, Manic Monday. So we'll see. Now, why we're coming up on support here, right? Now, if that breaks, we could, we're so close to a daily support level, they might take it down 1, 2, 3, 4, 5. But this may not go all the way down. We may have another move higher, and so you want to watch that because it might suck you into a short, and then this thing goes up on you. So look for, you want to sell against this 99.57 area. That's where you want to look to sell, right? And that way your scalps, your entry may not be that great, but you'll have, the market tide is down, right? You've got this massive market tide that's behind you, and we got lower swing highs and lower swing lows, and maybe we finish a double top. I'm looking at double. We have a kind of a pseudo double bottom here, and maybe some type of an A, B, and maybe some type of a C coming up, where this actually moves higher. So I know it looks pretty bearish here. Um, Trade what you see. We have a high of 95.40 here, low of 99.06. If something breaks here, you could scalp it north. If something breaks down here, take it on down to 98.89 or so. But usually the trends don't go on through Monday. They take their pause. The volume is low. People are on trips and vacations and 3-day holidays and Super Bowl Sundays. So you might have a lot of traders not even coming to work on Monday, hungover, from Super Bowl, and having a good time, watching their favorite team win. So you might see decreased volume, and you think, oh, a football game doesn't affect that. You have some type of a soccer World Cup or something, the volumes will dry up around sporting events. So just watch it. Okay, so that's a dollar Swiss. Again, I'm looking at a continued short that continued to drop, but short term, like maybe on Monday, we might have a rally to the north side. We'll give you a place to initiate your shorts. Okay, let's go ahead and move on to the yen, the next major pair, and I want to talk about that. And we can see, and I'm running out of time here, so I want to just hit that really fast. Daily chart, guys. The yen is a risk. Right now, long yen is a risk-off trade, and this is paired against the U.S. dollar, because it makes it a little bit difficult, because you have, usually people run to treasuries for safety, but that's when the U.S. was considered a bastion of stability. Still, so we have something where we are kind of a bullish, kind of a flat here. We might see this act as support, 1249. That 1249 level held after being hit 1, 2, 3, 4, 5 days. 5 days of being hit. We might see a rebound. But it's really mixed. It's choppy. If you try to trade this, this up, down, up, down, up, down, very difficult to trade. And the 30% retracement is down here at 111.26. We could see a spike down, and we could see a spike up. I would probably stay away from this, only because you're pairing two currencies which are traditionally safe havens, and so they're kind of like tug of war, kind of battling each other out. But we can probably drop down to a 15-minute chart and see. So, and it's a really nice range of highs and lows, and if you sold at the top and bought at the bottom, you're doing pretty good. We're approaching a daily support, 1249. So if we got long 1249 with a stop, we can look for a move maybe back up to the top of the range, 1312, right? So you can play the range. So it might be pretty helpful that it's still stuck in a kind of a channel. You can scalp for a few pips at a time. All right, going on to, I'm going to put on gold. Let me put pound yen on, because pound yen is a it's you have a currency that is not a risk off currency, a safe haven. But we can see that hats off to Peter, who's in the chat room. He's doing really well. He's been shorting this channel, and especially when we had the Bank of England keep rates unchanged and the inflation forecast wasn't as high as expected. We had a sideways consolidation, a break north to the 200 moving average, and then we got and I got stopped in for about 40 pips, and then I trailed the stop, got stopped down the rest, and then it continued to drop, right? And hats off to Myron out there. Myron, she got short on the break at my stop. Congratulations, girl. You go, girl. And she took it for like 82 pips to the south side. So long distance high five to you. And then Peter went back and he got short. So basically we got this channel going down, right? But we are finding a bottom here, and we're in between two big major level here. So who knows? We might see a rebound up, and it might be a great place to get shorts. 170.78. 140.78 is this daily support. If price comes back and tests and turns back down, maybe a great place to get short for a move back down to like 138. So, and we have basically it based sideways and now it broke this sideways consolidation below the 200. So my estimate is that we go down from here, but we might get a temporary bounce on Monday, a bounce higher. But I think we can scalping short will make the most pips. Okay, all right. I'm going to go to gold, and then we'll go through the economic calendar, and we'll be done. Okay, trying to get done quickly. Here is a 50,000 foot view of our gold, and we're looking at gold had broke the 1200 barrier. We were talking about that last week. We're at 1219.65, and we can see how we've been breaking these areas, and we're sitting at the 200 moving average. I look for a break to like 1233. There's a big gap down from here from 1259.78, and I think gold continues to move until we fill. And when we hit this 1265, look for a big acceleration up to 1308. Might see 1300 very, very soon. Okay, gold is acting as a safe haven protection during these turbulent times. Going to a 15-minute chart, and we can see that maybe a pullback will give us an entry, and a break above the 1221 daily resistance will give us a great entry on a break above these old highs here that we saw on February 3rd, about 10:45. Okay, let's get to
the
news.
This is the economic calendar for the week of February 5th, 2017. We'll go ahead and get started with focusing mainly on the red coded in high impact announcements and how they would affect the currency pairs in question. At 7:30 we have Australia retail sales month on month 0.2%, 0.3% is the forecast. So we would expect the Australian dollar to strengthen as a result of this announcement. It's going to be at 7:30 p.m. Eastern time. All times are in Eastern time. So you want to look at all the pairs that have Aussie in them. We might even see Euro Aussie fall, Pound Aussie drop, and Aussie dollar rise if this number comes in better than expected. On Monday, February 6th, we see some New Zealand and Australian data. The 9 p.m. we'll have the inflation expectation report. There are no forecasts for this number. 1.7% is the previous number. Anything higher than that, we could see the New Zealand dollar rally at 9 p.m. Also have the RBA, the Reserve Bank of Australia, at 10:30 p.m. They will have an interest rate announcement. They're expected to keep rates unchanged at 1.5%, and they'll also have a statement that follows. And if they do keep rates unchanged, you might see the Australian dollar rally, as it is a high yielder compared to the U.S. dollar or the British pound. So you might look at Aussie yen as a possible trade. I would stay away from yen pairs, but I would look at Aussie dollar and look at how it reacts. 10:30 central bank interest rate announcements are the biggest movers for our currency. Okay, Tuesday, February 7th, our red high impact news items, 8:30 a.m. Eastern time. That's during the U.S. news cycle. We have Canada trade balance expected to rise from 0.5 billion to 1.2 billion. The rising price of oil and commodities and the weaker dollar strengthening the Canadian dollar possibly. If this number comes in better than expected or in line with expectations, we could see the Canadian dollar rally. Okay. Next one is the GDT price index. It's a tentative. The time is tentative. We don't know. No forecast is given. 0.6% was the previous number. Anything higher than that, we could see New Zealand dollar rally versus the majors. If not, if it comes in disappointing or less, we can see New Zealand dollar drop. Okay. IVPMI is at 10 a.m. That's a medium impact announcement, but usually the Purchasing Managers Index does move the Canadian dollar, and so we can see dollar CAD maybe sell off if this number comes in better than expected. But its forecast is coming lower, so we may see a surprise to the upside, perhaps. Okay, so keep an eye on that at 10 a.m. Eastern time. Okay, moving on to Wednesday, February 8th. Our first U.S. major announcement, 10:30 a.m. We have crude oil inventories, and that would, since we're not trading crude oil, but crude oil proxies would be the CAD yen, and also Canada is the third largest supplier of oil, one of the largest suppliers of oil in the world. Japan imports 99% of their oil, so a CAD yen currency would probably be something that is a proxy for oil. If not, we can use a dollar CAD as a proxy for oil as well. And if we see that number, 6.5 million barrels, if we have less than that, that means we're sucking up oil, we're using it up, and then the price should go higher. However, if this number is larger than 6.5 million, it means there's a surplus, a glut, and so we would see the maybe the Canadian dollar drop. Okay. Now at 3 p.m. we have the RBNZ, the Reserve Bank of New Zealand, is going to have an interest rate announcement. They're expected to keep rates unchanged at 1.75%, and there's also a statement that follows. And if they do keep rates unchanged, we could see the New Zealand dollar rally. But listen to that statement that follows, because they're going to guide the currency based on future conditions in the economy, whether they see inflation coming up, or maybe they might see reasons to loosen, or keep monetary policy unchanged for a long period of time because of maybe uncertainties in the world. So we might want to listen to what's going on and look at price action. Be careful out there. Okay, and the Governor Wheeler is going to speak at 7:10. So you're going to have not only have a press conference, a rate statement, the statement, but at 7:10, Governor Wheeler is going to speak. So the New Zealand dollar should be in play. Should be a pretty active currency pair on Wednesday, February 8th. Moving right along to Thursday, February 9th, we have the Reserve Bank of Australia Governor Lowe is going to speak. That's 4 a.m. and see how he talks about the currency. Maybe you might want to talk it down or talk it up. There's a currency war out there where central banks are trying to keep their currencies low so they can benefit exports. On the other hand, they want to normalize rates because that's a sign that the economy is getting strong. But nobody wants to be the first central bank to start hiking and taking the hit. But and because that would make your exports more expensive. U.S. unemployment claims at 8:30, 246,000 previous, 249,000 was a forecast. Okay, if we see unemployment claims come in lower, we can see the dollar rally. If we have unemployment claims rise, we see the dollar weaken. Okay, so that's the 8:30 news cycle. Next high impact statement, 7:30, the RBA monetary statement, and just got listen for that, or actually look at price action, pull up Bloomberg and see what comes out on the news, or get maybe Rand Squawk or some type of news feed, so you can find out what's going on with that if you want to trade that Aussie dollar. Okay, and you might want to maybe even wait an hour afterwards, and that way you can get some direction after the announcement has been made. And then on Friday, February 10th, finally, we have the UK 4:30 a.m. manufacturing production month on month expected to fall from 1.3% to 0.3%. That may hurt the pound and cause it to drop versus the US dollar or other currencies. So you might want to take a look at that. If it comes in better than expected, we could see the pound rally. So we want to see how this looks at 4:30 a.m. Eastern time on Friday. And also on Friday 8:30, we have employment change. We have the previous number is 53.7 thousand. So we want to see if that increases or decreases. If we have higher employment, that should be good for the Canadian dollar. If it comes in lower than the previous number, that could be a reason to sell the Canadian dollar. Unemployment rate 6.9%. Same thing. If we have a higher unemployment rate, that's bad for the currency. Lower unemployment rate, actually good for the currency. And then we have at 10 a.m. we have the preliminary University of Michigan Consumer Confidence, that's UOM, and expected to fall from 98.5 to 97.9, and the number was actually revised up. So it's really a bullish previous number because it was revised higher. Now the forecast comes at 97.9. If that number comes in higher than the previous and higher than the forecast, look for the dollar to rally. However, if this comes in significantly lower than 97.9, significantly lower than 98.5, then we could see the dollar drop. Remember, the dollar is in a downtrend now, and toward the end of the week, we could have seen some drop in the dollar during this time. Okay, so those are the major announcements for this week. So I want you to be safe out there. If you have any questions, remember we're going to be doing courses and classes this week. So make sure you tell a friend, share a link, and if you have any questions, post them in the group. And I look forward to seeing you in the Facebook group or in the trading room this week. Talk to you soon. Happy pipping. Cheers. This is Greg McLeod signing out for the Elite Trader University.
Hey guys, you want to catch the next big Forex move? Then make sure you stay in touch with us via social media. You can follow me on Twitter, Greg McLeod. That's MCLEOD, Trader, TRADR on Twitter. You can also join our distribution list at www.elitetradersuniversity.com. You can also join my free Pip and Run group on Facebook. And make sure you check out my YouTube channel for my latest scalping videos, Gregory McLeod Trader. Make sure you give us a like, a thumbs up, and share, and also subscribe. Be a subscriber so you can be alerted of my next videos. You can also connect with me via Instagram, simply Pip and Run. Or you can just reach out to me via email, greg@elitetradersu.com. Look forward to hearing from you, and have a great day. Happy pipping. Cheers.